Tuesday's China devaluation caught a lot of traders by surprise. Probably didn't really know how to profit from it, especially more of a retail client. A more experienced trader would have looked at that news, said it's really bad for China, so it's bad for Aussie, bad for New Zealand. And this is a 1 minute chart. Lots of opportunities, very slow moving to get in on this. There was potentially 100 points to pick up in Aussie or New Zealand. Even Canada being a commodity currency, China slows down, so does the commodity prices. So another currency you could have picked on there, selling Canada. And you can see how much these moved. The extremes hit after about 90 minutes, and these are the percentages. So catching that would have been tough on Tuesday, but today on Wednesday we had another devaluation, and after 1 minute, you could see there was still another 50 points here, another 50 points here, another 50 points here, doing the exact same strategy that was good for 100 points the day before. Very simple. They had only moved about 0.6, and you could see that they still should have room to go. And you can see on Wednesday these numbers turned out to be pretty similar. So getting into these after the first minute, once again, when things quieted down, very easy to do. Very nice little profits. Another possibility was buying the euro dollar pair. Why? Because that was the first 90 minutes on Tuesday, and by the end of the day, the full 24 hours on Tuesday, you can see Aussie was about the same. New Zealand stayed about what it lost, actually lost a little bit more over the course of the rest of the day. Canada lost a little bit more. Yen lost a little bit more. The pound pretty much the same. The one that sticks out is the euro. It went from being down 0.5%. It recovered that whole 0.5% plus another 2% to wind up the only one on the plus side for the day. So for today, Wednesday, looking to buy euro dollar if the chance came up made a lot of sense. Now these are all the charts. Here's today's devaluation. This is my favorite moving average here. I kind of keep that quiet what it is, but the point is when it gets back above it, potentially we're thinking if you want to be buying, that would be where you'd buy it. No reason you want to think about buying Aussie dollar, New Zealand dollar, or selling dollar Canada just because it's going back through the moving average. Because the day before they didn't really move back, they stayed. But the one that didn't was euro dollar. So this one here, that's all it went down, was that little tiny bit. When it went back above the moving average, days you buy. You stop below the low, you're risking 20 points-ish, 25 points. And from there it went up about 170 points. So there was a 6 or 7 to 1 risk reward potential on that trade, and it was simply taking advantage of something really simple. Simply saying the day before it's the only one that recovered. It was clearly the strong one. That's all it was. So I hope you enjoyed it. Jimmy Young signing off. Bye-bye.